Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormis Patakia. Well, I got the color right yet again, guys. But yes, of course, the cuts are not as deep as we saw yesterday. So it's a 37-point cut that we're looking at the Nifty with right now. And Nifty Realty, which was a big drag yesterday, that has recovered some of the losses. That jobs cut at TCS came as a surprise and a shock to the entire industry as well, because a lot of its revenues are from leasing commercial spaces to IT companies itself. So today, Nifty Realty has made a comeback, but IT continues to be under some pressure. So we do have the IT index, which is down around 0.6%. Small caps have also come under some pressure. We do have the mid caps in the red as well. So across the board, there's not really a big sign of recovery that we are seeing. In fact, small cap did see some green at around 10 a.m. and there has been a sharp slide from the highs from there. Same is the case with mid caps as well, down 112 points right now.
Indeed, and the cuts are not as bad compared to what Asia is doing right now.
Yes.
So Hang Seng and Nikkei, both of them are down over 1%. So maybe, the Indian markets have been sluggish now. This would be the 5th week. Last 4 weeks, I think markets, closed with weekly losses. And this week too, we haven't started off on a strong footing. But again, today seems to be a more quieter session, just consolidating, but it's got a negative bias.
You may not want to be falling into that category of you spoke too soon, calling it a quiet session. But yes, as of now...
Maybe the last one is less quiet, right? Let's see that little bit of a dip.
The fall from the highs is the bigger talking point, right? It's following a familiar script. It was somewhere around about 10:30, 11 o'clock yesterday as well that the indices had begun to slide from the highs, as we were talking about it in yesterday's show as well, when we were seeing those sharp intraday swings, and taking nothing away from the fact that earnings reactions continue from the broader markets predominantly on the negative side. And take a look at the defense names that are taking a bit of a beating today. Zen Technologies is the third straight day of lower circuits in today's session, and Masgaon Dock 2 is down 5% after its results. We'll talk...
BEL2 is down
BEL2,
2%, yes. In the front line.
And indeed, we have to see more on these defense companies as well on the valuation front. We'll get to more on these as the show goes by, but on to corporate conversations. First up, Transport Corporation of India. And revenues were up 9% this quarter. Profits also increased 17% from last year. And Vineet Agrawal, who is the managing director of the company, is joining in right now to discuss the road ahead and, of course, how the quarter panned out. Vineet, good morning. Thank you for joining in. What has happened with the margins for the Seaways business? There has been a very, very sharp improvement, as we see. We've gone up to 37% in this business. Is that level sustainable, or do you see that 28-29% historical levels are the ones that are the normal ones?
Hi, it's a pleasure to be here. Seaways has seen quite a remarkable jump in the last, in fact, a year or two. With the crisis in the Middle East and other things that are happening, as you know, with geopolitical tensions, the freight rates globally have been rising. And they sort of, come down a bit and then they pick up a little bit. And, there's always been a lot of uncertainty. And when that happens, the capacity from the Indian markets, and as you know, we operate only on the coastal routes of India, that capacity moves away from India and goes outside. And when that happens, the freight rates domestically also go up. So the last quarter has been decent, more in terms of the number of trips that we've done and the fact that the freight rates have remained stable. Fuel prices have come down a little bit. That is the bunker prices specifically for the coastal ships. So all in all, it was a good quarter for the shipping business, and hence we saw decent margins. I do not think they're always sustainable. They've been keeping up this 30-40% range, but I think it should probably stabilize more between the 25 to 35% range.
Okay. Vineet, on the freight business itself, you said freight rates were steady this time around, but we did see margins declining on a YOY basis to 2.4% versus 3%. EBIT was down 17.9% and revenues grew in single digits. When do we see higher growth come by here, and when will we see an EBIT margin expansion?
See, the freight business follows the GDP growth to a great extent, and also follows the kind of industrial activity that is happening across the country to a great extent. Industrials are a bit slow, and we've seen that the order books are there, but really the flow has been very less in this last quarter. And we are seeing this trend continuing even in Q2. We know, for example, that the summer has been weak and that has affected consumer durables, even consumer FMCG sales, as well as things like industrial gases, etc. The things that have done well is agriculture, that the sector has picked up, including the inputs, more on the input side, as well as tractors, etc. So the general weak sentiment has affected that business and the growth has been subdued. And we are seeing festival stocking started, and we are hoping that this will start picking up in Q2, towards the end of Q2, and then it flows on to Q3 and Q4. But right now, the business is really mirroring what's happening in the economy.
Got that. Vineet, hi. Morning. Reema here. Just some numbers on the guidance. Last time you spoke about a tonnage growth of 7 to 8%, revenue growth of 10 to 12%, and margins improving by 150 to 200 basis points. That was the guidance we have for FY26. Is that intact?
Yes, our expectation is that the next few quarters should start picking up. And, we have to look at the kind of growth that we are seeing in different businesses as well. So one is that our supply chain business is doing reasonably well. We've seen huge amount of growth coming from the warehousing side, for example. Warehousing structure is changing in the country. The demand for warehousing for quick commerce, for example, is increased dramatically. We are doing a lot of that as well. Or for that matter, companies wanting to work with larger companies like us or organized players like us, that's increasing a lot. Cold chain business is increasing. Our rail business is increasing. So some of our joint ventures are doing reasonably well. And I think a combination of all of these factors would mean that we should be able to maintain that guidance that we've given at the start of the year.
So 10 to 12% revenues, tonnage growth 7 to 8%, margin improvement 150 to 200 pips.
That's right.
Since you mentioned cold chain, Vineet, how did that fare in this quarter? You mentioned it has picked up. By what quantum did it do so? And what are your targets that you have for this business for the year?
Cold chain is a very interesting business because, what we are seeing is that different kinds of growth sectors. It's a small business for us. It's about 100 crore business, but we grew at about 18-20% in the last quarter. Business growth is coming not just from pharmaceuticals and QSRs and the food sector, but we are also seeing growth from things like chemicals because there are certain types of chemicals that require cold chain now, as well as battery technology. Certain kinds of battery also require an ambient temperature. The ambient temperature in India is not 20 degrees, it's much higher. So you need to maintain certain kinds of products into that kind of ambient temperature. So cold chain in the next few years is going to be a real growth driver from many areas, including in the future, maybe even semiconductors. So yes, we're very bullish about it.
All right. And what about the capex plans for FY26? So what do you have on your radar? Because it was around 275 crores in FY25.
The plan is to spend about 450 crores this year.
And how do you fund that?
The funding is mostly internal. We have enough cash flows coming in. We can take in certain small amount of debt. We have about 250, 280 crores of cash also on our books. And the capex is going into ships that we placed an order for last year, which will be delivered next year. So some of that capex, some of into trucks, into warehousing, into equipment related to warehousing, conveyors, etc., and of course into IT systems. So this capex of 450 is really planned out. We could do more if a second-hand ship is available to us, and that would be another 150 crores.
Very, very quickly, just on quick commerce. I thought last time you spoke, in previous interactions, that you steer clear from quick commerce, e-commerce, because of poor unit economics on delivery, where delivery charges have come down to 4 to 5%. But now you're saying an opportunity is opening up on the warehousing side. Very quickly.
Warehousing is very different from that part because, warehousing is on the fulfillment side. We do the back end, we do consolidation from various suppliers and then sending the material to the dark stores. The last mile is not something that we do. And as I said, that's where the unit economics don't work for us.
Got that. Thank you very much for that. We'll get into a break. The management of Motherson Sumi Wiring India joins in on the other side. Stay tuned.
Welcome back. The management of Motherson Sumi Wiring now joins in to discuss the quarter gone by. The revenues were up. Margins declined though compared to last year. The revenue growth was supported by an increase in content per vehicle. Gulshan Pahuja, who is the CFO, along with Anurag Gahlot, who is the Chief Operating Officer at Motherson Sumi Wiring, are joining in now. Gentlemen, good morning. Thank you for joining in. Your quarter gone by, you saw revenue growth of around 14%, which was higher than the passenger vehicle industry growth, which was just 3%. What contributed to that? Was it the increase in the content per vehicle, or was it did it come from the new customer model wins that you added this time around, or a combination of both? If you could tell us more on that.
Hi, good morning. Thank you for taking us on CNBC. As you said that the industry has grown by 3% and we have grown by 14%, and that is mainly due to three reasons. One is the volume growth, which is 3%. Another one is the higher content and availability of MSWIL into the new model launches as well. So it's a combination of all. If you have seen that passenger vehicle is dominating by the utility vehicles, and in that also you will see that top models are selling. So cost of sales for MSWIL is directly linked to the cost of models they are making. So it is directly linked to that. So if they are selling the higher model, the higher sale we have. And as I said that if you've seen our update also in the 3 greenfield, that we are already a part of the new launches, which are going to happen in the market in the coming times.
Okay. Gulshan, let me come to you, because your EBITDA margins ex greenfield projects are at 11.7%, but overall margins have dropped to 9.8%. Can you give us a sense of what's happening here? You're talking about higher demand coming in, but it's not translating so much to the EBITDA. How long will you foresee this drag continuing? And the other facilities as well, when will they break even?
So if you see the greenfield expansion units, so if you just take out the impact of those units, our EBITDA has marginally improved from 10.7 to 11.8% quarter on quarter or year on year basis. So if this greenfield expansion units which are reflected in our current quarter results, and that got impacted our margins, because there are certain plans with respect to the certain greenfield units have got delayed. So if you see our presentation also, the unit wise plan is already coming in that slide. So there are certain plan which was supposed to be start in Q2. The volumes are ramping up, and you will have to see in the next quarter their impact will come. So that's
Yes. So what is the margin target for FY26 ex greenfield and including greenfield?
So once this volume will ramp up, basis the schedules from the customer and the revised projections, if able to meet that requirement, I think the margins will be there when we are in terms of the existing units.
Okay. Can you give us a number?
Numbers are already there, because all depends on the customer projections only. Because at this moment we only have that visibility that some of the plans have already been deferred. So once this volume will kick it off and the volumes ramp up happen, I think you will see that the margins will be there.
Anurag, can you give an indication of how Q2 or H2 is going to pan out? Because there are a lot of launches planned. I think there's e-Vitara, Escudo by Maruti Suzuki, Sierra by Tata Motors. M&M is ramping up its EV production. So can you sustain this 14-15% kind of revenue growth for the next 9 months? And as these ramp up, again, getting back to that question, where were the overall consolidated margins? Can you cross closer to the 11% mark? And what would the contribution of EV rise to? So 3 parts in this, but if you could explain all.
All right. Okay. So first, coming on the first part of your question, I think the way, as Gulshan has also suggested, that there are 3 greenfields and there are many launches, as you also said, of Maruti and Tata, which is going to happen. And once the volumes will ramp up, these costs will, get normalized with that. More than that, important is that we look overall in the, in totality, we see the ROS to our company. And if you've seen the last 3 years, we remain more than 40%, which is as per our company guideline. So margins will take some time, obviously, as the volumes and these things will pick up. And on the EV part also, we have remained to 5.41% of our sales is EV, which has increased from the last financial year, from 4.81 to 5.41 in this quarter. And I think with these new launches, EV penetration will grow more, but we have to watch very carefully how the consumer is going to react to these EVs. But the good news is that MSWIL is very much ready to take care for any of the EV volumes which are going to happen or any new technologies coming into this. We are a very much future-ready organization.
And 15% revenue growth sustainable?
I think it might happen if consumer is going to buying the utility vehicle and that also top model. Why not? We are already 14% surpassing the market. So if tomorrow consumer keep on buying these vehicles, which are the top models, MSWIL is directly going to get the impact because of that.
You know, Gulshan, the earlier timeline for your Navagam unit to come on stream was this quarter, but now it has been pushed to the fourth quarter. What is the reason behind this delay? If you could tell us that. And are you on track to commission it in the fourth quarter? And once it does, how does it add on to your P&L?
See, as Anurag has already mentioned that we always have our planning ready in place. So we have all the capabilities in place. Whenever the customer will ask us to wrap it up, we will have that thing. I think this is something that the plan has got shifted from quarter one to quarter four. This is something on account of the customer requirements, basis their new launches. That's how the plan has got revised. And the answer to your second question, that once it comes up, obviously that will impact in our the cost will be normalized, and that will reflect in our margins also over a period of time. I think it's a matter of time, 1 or 2 quarters. Once this volumes will ramp up, I think you will see the cost will be absorbed and the revenue will be back, and the margins will be there and stable.
So while you're talking about margins, copper prices, they have been very sticky so far. What is your channel check suggesting? How would these prices pan out going forward?
See, in terms of the copper prices, we have a contractual understanding with the customer to pass through them. Okay, so whenever the price increases happen, there's generally a lag of quarter or a half year, and it always passes through with the customer. So you have to see a period of time like 3 to 4 quarters. The impact of the same will always get neutralized in our financial results.
Thank you, gentlemen, for joining in. Always a pleasure speaking with you. Wish you all the very best. Get into a break. As we do that, a quick small programming note for all our viewers. As the workplace transforms, so must leadership. In the Bengaluru edition of the Future Female Forward Season 3, India's top business leaders gather to reimagine what inclusive leadership looks like and how women are powering the future of work, capital and innovation. Catch it live today evening, 5:30 p.m. onwards, only on CNBC TV 18, CNBC-TV18.com and YouTube.
Welcome back. There has been a recovery from the intraday lows for the index. It has now moved into the green as we speak, nearing that mark of 24,700. But there are enough and more pockets that are not doing well. Lakshmi Organic is one such name, down 7%. Result reaction as well. So 7% lower on Lakshmi Organic. And of course, can't take away from the fact that most of the defense names, actually all of the defense names, are taking a bit of a beating in today's session. But what are some of the other movers in the broader markets? Vivek is here to put the spotlight on some of them. Vivek.
Well, thank you so much for that. Mostly dominated by result reactions, a very strong reaction to results. Along with that, a lot of news flow. First on the list has to be JSW Steel today, in a very important development. Remember, review periods by JSW Steel as well as the lenders will be heard by the Supreme Court, and any development on that front will be a significant, impactful event as far as JSW Steel is concerned. The other stock on the radar, one from the broader end of the market, is Paradeep Phosphates. The EBITDA margins here in Q1 has actually more than doubled. So that stock on strong volumes high by 12.5%. Look at Flair writing, exports over here too has become quite strong. Back of that, almost 7% higher. This after the stock has seen quite a strong rally. Go Digit, even though the results were slightly muted, this particular stock on strong volumes has gained over 4% today. And Torrent Pharma, yesterday the company held a conference call post Q1. They've given a good guidance as far as margins are concerned, and brokerages have come back quite upbeat. Brokerages also say the acquisition of JB Chem could actually add or aid a re-rating as far as the valuations are concerned. On the other hand, like you mentioned, Horma's different stocks, Mazgado came out with this results last evening. weakish execution on the back of that. That stock low by almost 4%. Home First Finance, from the lenders back, this particular stock's of very weak asset quality, and on the back of that, almost 5% low. This is after a 5% down tick that the stock saw yesterday. Poonawalla FinCorp, remember, was one of the top gainers yesterday, almost 7% higher, but that stock has given up most of its gains today. And IEX, it's been a very volatile last couple of weeks for IEX today. A Bernstein downgrade coming in. Market coupling implementation is something that has prompted them to downgrade the stock. That stock low by 4% today.
Okay, after that sharp fall, there's still more to come for IEX when it comes to market coupling as well. Thank you, Vivek, for joining in as always and telling us the stocks which are moving around in the broader markets. Let's get Mitesh Thakkar for a quick technical check on the markets. Mitesh, what's the market's mood now? What are the charts suggesting? Do you think we'll continue this volatility that we've been seeing, big fall and sharp recovery from the lows? What's your take?
To me, I think the market looks like, possibly completing a leg of decline and getting into, preparing for some kind of sideways action. Though my downside targets were around 24,500, 550 zones. We got a low of around 24,598 or something. But the idea is that around these levels, you might not see much of a downward thrust. The PCR is also slightly, suggesting levels which could indicate that the declines could be arrested, at least in the short term. So mostly looking at a sideways kind of a market, broadly 24,550 to about 24,920.
450-point range there, Mitesh, but specific stocks?
Yeah. On the stock side, Bosch looks good with a stop below 38,000. Look at a target of 38,800 over here. While GMR Airport is negative or a sell call on the stock price. So keep a stop around 91, look for targets around 86.
Got that. Thank you very much for that. By the way, a bit of a recovery in the markets now. So in the green for the Nifty, Eternal has trimmed its losses. It was down nearly 2%, now down 1%. L&T is seeing some buying ahead of its numbers. Look at that intraday move in L&T. That's raced away to a 1% gain now. Numbers today, along with that, you've got numbers from Asian Paints. But for L&T, the street is working with a 14% top-line growth, EBITDA margins at 10.1%, and the company is likely to retain its guidance. So L&T is a stock to watch, the big up move starting 11 o'clock on that. But now let's get a handle on the latest trends in the futures and options space. Mangalam joins in.
Well, the market's grinding lower, but from low levels, it is seeing some purchase as well. But just the way it happened yesterday, any sort of recovery from the lower levels was sold into. And let's see whether that continues today or not. In the second half of trade today, there is that likelihood of volatility increasing, and that's largely because it will be the Sensex monthly expiry that will take place as well. So the Nifty Bank, as well as the mid-cap index. The mid-cap index in particular has seen some recovery from the lows. So the mid-cap index now marginally in the green. The other data point that I'll be watching out for very closely is how the advanced decline behaves, because for most part of today's trading session, we had the green line above the red line. Thereafter, in the middle, there was an intersection, and the red line has moved slightly above the green line. Let's see, now they're coming close once again. So the green line does move ahead. We can see signs of recovery, though still not out of the woods. And that is, determined by the fact that the India VIX continues to rise despite the consolidation that we are seeing. Over the last 3 trading sessions, it's risen nearly 21%, going comfortably above levels of 12, which tells you that it is an option seller's market right now. Ahead of the monthly expiry that takes place day after tomorrow on the Nifty, it's the 24,650 straddle, which is a call and a put together, which are extremely active. So 24,650 call has a premium of almost 128 rupees. Pull up the 24,650 put, you will have a premium of around 80-90 rupees on that one as well. So those who are writing these two options together are hoping for pocketing that 200 rupee premium, and the reason when they make money would be if the Nifty holds at lower levels at 24,450 and does not cross past 24,850 on the way up itself. So that's the kind of fulcrum that the street is watching out for. As we're looking at a bunch of individual stocks, Bharti Airtel stands out. It's doing well in an otherwise wobbly market, currently at the higher end of today's trading range. So a lot of long positions added out there. And the other one I'm looking at is IEX. That too may enter F&O band once again in today's trading session, given the sort of open interest build-up that we've seen in IEX. So these are a couple of stocks I'll be watching out for.
Thank you so much, Mangalam, for joining us with the F&O update. By the way, those are Gail's conference call updates which are come by. They target addition of 85 new CNG stations in the next 2 years, something that they had spoken about in the earlier conference calls as well. And it's marketing EBITDA guidance of 4,000 to 4,500 crore rupees for FY26. They are maintaining it. And the stock is lower by 0.9%. Now, remember the numbers which were lower versus the muted expectations as well. And that's why the stock opened lower and continues its downtick. The biggest trigger, of course, for Gail will continue to be the tariff update that comes by for their unified pipeline, and that is something that Street is watching out for, because that is something which will indicate what kind of EBITDA they'll get in their transmission pipeline, which did not do so well. So we should change that flash. It should be maintained marketing EBITDA guidance of 4,000 to 4,500 crore rupees. Their natural gas transmission volume guidance has come in at 127 to 128 MMSCMD, which compares with 138 to 139 MMSCMD earlier. So that's a cut which has come by in their volumes, and that is very important to note, because the transmission business is the one where maybe tariffs will go higher, but if volumes are lower, that means EBITDA will continue to be at the same levels.
Got that. Thank you very much for that. Get into a break. On the other side, we'll come back and get you more movers and shakers in today's trading session. Welcome back. L&T continues to see buying again at the high point of the day, 1% up, and it's helping the Nifty touch the 24,700 mark. But let's find out the other moving stocks in trade, the buzzing stocks. Our research team is joining in. We've got Upasana joining in on Mazgaon Docks. We'll talk more about Paradeep Phosphates and even about 5-Star Finance. But let me start with Mazgaon Docks. Upasana?
Well, overall, the company has reported a weak set of numbers, mainly due to weak execution and even higher other expenses that have impacted the performance of the company. Now, coming to the revenue first, revenue saw an uptick of 11% on a one-year basis and declined 17% sequentially. EBITDA also declined by 53% on a one-year basis, and EBITDA margins dipped as high as 1,575 basis points, stood at 11.5%. Net profit stood at 452 crore, down about 35% on a one-year basis. Now, profitability in Q1 was mainly impacted due to higher expenses, and majority of it was contributed by subcontracting expenses, which saw an uptick of 9% on a one-year basis, led by other project-related expenses, which saw a jump of almost 13 times on year-on-year basis. Provisions also elevated, stood at 540 for the quarter. Now, Antique maintains a buy rating on the stock with the target price of 3,858 per share. It says that the elevated provision impacted the overall profit margin of the company, but the follow-on Scorpion and P-75 submarine project, it's boosting the order book, and it maintains the midterm growth going forward for the company on the back of this. It says that the margin volatility from provision hikes is likely behind for the company, and potential delay in order is flagged as a risk by the brokerage. Overall, for FY26, it has cut EPS by nearly about 8%, and for FY27, the brokerage has unchanged its EPS estimates.
Okay. You know, this that Antique was saying that the trigger for the company would be the order for those 3 additional Scorpion submarines. They're saying if it comes through, if the company gets nominated, it can double their order book. So that's, you know what, the big trigger that Antique is looking out for.
Okay, all right. So we'll watch out for that one. But the other stock in focus post their Q1 is Paradeep Phosphates. Winnie is here to tell us what it looked like this time around. Winnie.
I saw a set of numbers that came in for the company in Q1 FY26. Good performance. When you're looking at it in terms of profitability, it's come in at 247 times increase versus last year, right? So 255 crores approximately is what the profit is at. Revenue seeing a jump of about 60%. Operating performance, very strong operating performance coming in there as well. 12.4% in terms of EBITDA margin versus just 6.8%. Obviously, the significant improvement in terms of profits as well as the revenue performance has been strong. That's leading to an up move move in terms of the stock. We'll wait out for the con call highlights coming in, but just in terms of what was highlighted in Q4 FY25, in terms of the con call, that given a guidance of around 4,500 to 5,000 as an EBITDA per ton guidance for FY26. Capex plans of around 500 crores during the year as well. So will be interesting to watch out for in terms of the guidance. What are they looking at now going forward in FY26?
A barely subscribed IPO, Paradeep Phosphates, is now up 5x from its IPO price, which was 42 rupees. Vinny, thank you for that update. And 10% higher on that stock today. But the other one is not doing too well, though, is 5-Star Business Finance. Has recovered from the lows of the day, but still holding on to some losses. Gaurav is here to tell us why the street is disappointed with this company. Gaurav.
Well, yes. Let's talk about numbers first about 5-Star. When it comes to loan book growth, that was at around 20% versus their own guidance of 25%. That was the first disappointment that we saw in the results. Other than that, when we look at disbursements, there also we saw some kind of a weakness. Let's move on to the income statement now. When it comes to net interest income, that increased almost by 18%, but net interest margins, now they have declined almost by 40 basis points. Another pain point that we saw in the business is the credit cost. Now, gross NPAs have gone up almost by 17 basis points, and as a result, when it comes to credit cost, the reported credit cost went up as high as 57 basis point to 1.3%. Now, when it comes to the stage 2 and stage 3 assets, there also we are seeing some kind of spike, which is something concerning. And that is the reason when we look at the profit that has declined, that has increased only by 6% on a year-on-year basis. Now, coming to the commentary, what management is saying, they actually take this MFI stress as a surprise. What they are saying is that they have actually increased their guidance of credit cost from 100 basis point that they have given earlier to 120 basis point now. And the reason being that they believe pain point in the MFI because of the over leveraging that still remains for Q2 specifically, the early pool, delinquency pool. What they are saying is that this will actually stabilize, but at the same time, we will see some kind of improvement in Q3. So definitely some improvement is what they are expecting. As a result, we are seeing some recovery, but because of the weakness in credit cost, we are seeing the decrease in the stock price.
Okay, all right. Thank you so much, Gaurav, for joining us. That's about 5-Star Business Finance. The stock, though, has recovered from the lows of the day, is down just 2.5% as we speak. With that, we'll slip into a break. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Welcome back. You're still tuned into Trading Hour. It's time to talk about commodities. Manisha is joining in, and today we are focusing on metals. What do you have for us, Manisha?
Well, after being a stronger July, as we head towards the close of the month, we have seen some profit taking for many of the metals. I'll start with copper because the COMEX copper prices fell 3% overnight. It was only last week that we saw COMEX make all-time highs at almost at $6 per pound. We're trading at 5.5 at this point in time. It's trading at a one-week lows, not just for COMEX, but for LME copper prices also. Here as well, we've seen the prices decline to almost $97, $70 a ton there. Well, US has announced, remember, a 50% tariff that comes into effect from 1st of August. Now, what the markets really are waiting for is the details of these tariffs, whether it's on copper, refined copper, copper products, cathodes, etc., or whether, and what really happens to various countries. Is it like a blanket ban, the way we have seen happen in case of steel and aluminum there as well? It's a 50% tariff. And also, a lot of countries have been pushing copper into the US markets ahead of these tariffs. So much of this metal is in transit also. What happens to that metal? So all of these details, as we look at 1st of August, are still awaited. It's not just about copper. We have seen profit taking actually come across metals. The 1 week highs that we've seen in dollar index has led to 4-month off the 4-month highs that we saw in case of zinc. That's the same case with aluminum and steel as well. Remember, we started previous week on a higher note. We did see 4-month highs as well. But all these metals, including zinc, aluminum, steel, are off those kind of highs right now. Nickel was trading at a 2-month highs just about yesterday. That one also has gone in for some profit taking. What the street will watch out now for is the US Fed meeting announcement and the US jobs data that comes in on Friday. That would give further direction.
Thank you very much for that. By the way, IEX is having another tough session. 3.5%, 4% gone on IEX. This month, it's lost nearly 30%. And there is a downgrade on IEX where Bernstein has downgraded it to an underperform, target price 99. So about a 20-25% downtick even from the current levels, because they're saying the regulatory order is seen more damaging than they expected, and they see little chance of the company overturning it. So that's been one of the misses in today's trading session. Get into, yeah.
The only one with a sub 100 rupee price target for IEX is Bernstein. So the lowest one on the street, still a 30% downside is what they see. We'll take a short break and put the spotlight on the two big numbers awaited later in the day from Asian Paints and from L&T. We get you the street expectations on the other side. Stay tuned. Welcome back. L&T, the big number of the evening, one of the two big ones actually. The profits are expected to rise 21%. Revenues are expected to rise too. Vivek is here with what the street is expecting from L&T. Vivek.
Well, that's right. The key numbers over here will be tracked. All eyes will be on L&T as to how exactly they go ahead and start FY26. Revenue seen higher by 14%, aided by steady execution. EBITDA seen higher by over 13%. Margins on a year-on-year basis expected to slip 10 basis points, and profitability seen higher by 21.5%. Now, what has the company guided at the start of FY26 to the analyst community? Top line growth seen at 15%. The core EBITDA margin guidance, that is the project the P&M margins as they call it, seen at 8.5% versus 8.3%, so 20 basis point uptick on a year-on-year basis. And order inflow on a very, very high base is seen higher by 10%. Now, the domestic order prospects is at 7 lakh crore and 12 lakh crore for international. And just earlier today, in fact, L&T actually went ahead and declared a very large order win as well. This is for the hydrocarbon business, again coming from West Asia. So, it'll be interesting to see what are the order books that the company has booked as far as Q1 is concerned. What are the orders that have spilled over to Q2? And the more important question, that we'll be asking the management is, what are the prospect of the sale of the Nabha power plant, as a few media agencies reported, to Torrent Power.
Thank you very much for that. Varun Beverages numbers are flashing for you on your screen. On the top line has declined by 2.5% on a year-on-year basis, while the bottom line has gone up by nearly 5%. These are the only two numbers that we have. EBITDA has come in flat. So revenues have declined 2.5%, EBITDA is flat, and profits are up nearly 5%. The stock is still in a bit of a tentative mode.
Yeah, indeed. And some choppy moves seen in Varun Beverages. It's a 2.5% decline in the top line. The EBITDA, as you just highlighted, is flat. There has been a very sharp decline in the finance costs. And we'll wait to see the management commentary on what they have to say with regards to the volumes and how the business has panned out during the quarter. We'll await more details from the investor presentation. But for now, prima facie, Varun Beverages, at first glance, the top line has declined on a year-on-year basis. The EBITDA is flat, and on the margins front too, they've been fairly okay. From 27%, they've gone up slightly, around about 80 odd basis points on a year-on-year basis. But that's Varun Beverages for you. You'll get more details on the other side when Mangalam joins in on halftime report. But from Rima, Sonal and me, we take your leave on this edition of Trading Hour. Thank you so much for watching.